Hi, welcome to this video today, which is on the 26th of September. We are on Sunday. Just going to look at some of our favourite trade setups in the market right now. And in terms of charts, we've got quite a few to look at, and we'll go over them in just a short while. Now, also in this video, I want to go through some simple tips in terms of getting better FX profits longer term with less downside volatility. Now, regular viewers are probably familiar with what I'm about to say. If you're new to our videos, we do trade the major currencies, but we more often than not find that the best opportunities are in the lesser looked at pairs. So look at as many pairs as you can. Here we monitor about 40 each day. Now, also, when you're trading Forex markets, they don't operate in isolation. They're part of a bigger picture. So you should do intermarket analysis. You don't need to do anything complicated, but you should look at what stock markets are doing, bonds, and also commodities. I'll make reference to how to do this as we go through the trade setups. Now we'll go over to the charts. Now, just before we do so, just always keep in mind, it's my view of the markets as of this moment in time. Obviously, it can change in line with the market action. If you want all our trading techniques, you want to see our analysis of 14 FX pairs daily, if you click on the link beneath this video, you can get live access to our member center. You can also join our Facebook group of traders, follow our Facebook page, and also check out our Recommended Regulated ECN broker. Now, in terms of charts, I'm going to use the charts from our member center. I've just done all my updates for the weekend, so let's go and take a look at them. Right, first chart we look at is S&P 500. Stock markets will have an impact on Forex markets, and in terms of this market, it has been a huge bull market. You can see it better on the monthly chart. Sell off after the coronavirus shock. Then look at that for recovery, driven by central banks and a huge retail army that's come in to buy. And a lot of people do not see a meaningful correction in stocks coming. Now, in terms of the daily chart, recently since mid-June, you've seen corrections be bought. So you can see here back on around June the 15th, come down on the red. This is a 20-day moving average, the green line, immediate bounce back above. Another one goes through, immediate bounce back. Okay, we spent a day beneath it here, but then bounce back. Now spent 11 days beneath the 20-day moving average. And you can see that you've had 3 blue days. Next week, can we break the 20-day moving average and the big 4,500 level? We could, of course. We do see stocks grind higher. That is not really going to hurt the positions that we're going to look at in a moment. But our positions would be helped if we have a breakdown. So if we get through this level, we could go here, then here. Okay. Market's not really seeing a correction coming, but you've got, slowing global growth, slowing growth in the US, obviously. Fed stimulus is being reduced. Price earning ratios are at bubble levels. I can add in, you possibly going to have a government shutdown in the US and possible debt default. Then you've got risks in the global economy, particularly in China, where you've got Evergrande, which is on the verge of collapse. And you can just see how important China's property market is to GDP. China property market is linked to 20% of Chinese GDP, 62% of household wealth. Now, the company will probably go down. Will the People's Bank of China step in to help? Probably. But that smashes confidence in the China property market, which I've written up on my blog. Why? China is slowing up. It's got big problems. I just want to show you, where is it? Okay, this is global growth, first of all. Clearly slowing in the last 3 months. China, retail sales are collapsing. Look at steel, crude steel production. Massive drop. Okay, and keep in mind that Chinese GDP is based upon just building all across China. It's not looking good. I just feel we might get some risk off. I think the market is just too complacent. Okay, now in terms of just one more chart before we go to the Forex markets, I want to go to, where are we? The bond market. This is US bonds. So it's a 10-year note and gives an indication of where bond traders see interest rates going. And the 10-year note has bounced. The yield is up now at above 1.45. If we can break 150, that would be heavily bullish for the USD. It's an attractive yield, means funds will go into the bond market, biggest in the world, and obviously you have to buy dollars to do that. So there's some charts to keep in mind. Now I'm going to look at the pairs, and we're going to start actually with my favourite pair at this moment in time, which is a cross, and it is AUD NZD. Right, AUD NZD, and what we can see on this chart is back in June we break into a downtrend. We go below the 20-day moving average, and then pokes above it are rejected. No closes above the 20-day moving average, the green line, and now we're travelling sideways after a big fall. Now, what I like about this setup is if you go and read forecasters' views on this pair, all the ones that we've read have said the AUD is going down. The reasons they say the AUD is going down is because New Zealand's economy is in better shape than Australia's. RBNZ will probably raise rates by 0.5% next month. The RBA, the Australian Central Bank, won't be raising rates for a few years. Well, yeah, you could say that's bearish, but it's travelling sideways price now, isn't it? Okay. Too many speculators have gone short. Okay. And on our favourite sentiment tool, COT net traders positions, speculators have their biggest short position in a good few years, and commercial hedgers who are smart money at turning points have built up a big long position. So bearish news not pushing price lower. 103 level is holding. 20-day moving average, then resistance just above it. If we can break to the upside, we expect the speculative stops to get run, go to 105, then 106. I'm coming early on this one. I should have waited for a break of the 20-day moving average. Stop at minute 102.65. But if we break out, that'll come tight in to 102.80. So I really like the look of this trade setup. Really good risk to reward. And I think the probability of a break higher is very, very good. Okay, like the NZD short in a number of pairs. I'm just going to look at another one here, which is NZD USD, featured in a video a couple of weeks ago. Big rally up on that view that the central bank is going to raise rates by 0.5%. We struggle a bit. We sell the set break of 71. Took some profit into the outer Bollinger Band here, half our profit. The other half came out minuscule profit. I mean, it's not big profit overall, but yeah, I think we are due to get back to chart lows and maybe even on to 65. The blue comes up, touches 71, a big round number. Then we have another poke to try and get up to 71. Can't fall back through the 20-day, go through the low. We should be off to chart lows. We've got some risk off. That would help the USD push the NZD down. But yeah, people are so bullish of New Zealand anyway. I don't see much upside even in risk on without a decent correction. Right, I'll look at some more NZD crosses in a moment because it's a big focus of ours. But before I look at some more crosses, I want to go to some more USD pairs. Look at Euro USD. In terms of Euro USD, it's been slow moving, not much volatility in this pair. We did have a decent short trade there, got stopped out and then sold off the 119 level. And we have worked our way lower, but not much volatility, just 140 pips in this pair, but just limited upside and a lot of downside. I think if this level here gives way, chart lows, daily chart lows, you'll see the volatility pick up, and then we'll go down to monthly support at 114, then 110. I think bounce is limited to double trend line here. 118 looks a tough level to take out. I've said in numerous videos, my view of the euro is just out and out bearish. Massive stimulus going on in Eurozone. They're increasing it, or the Fed are cutting it back. that's bullish for the USD in our view. There's a lot of talk about an economic recovery in Eurozone. I don't see a big economic recovery in Eurozone at all. US economy is doing far better. Okay, we've got German elections at the weekend. They'll be concluding. I don't see them giving the euro a lift. Merkel's gone. It's bad news for Eurozone and Germany, of course. So I think this one, if you want to trade it, just a small position, then wait for a break to new daily lows. If you load up there, I think you'll see higher volatility, big move to the downside. So yeah, a bit of a patience game with this one. I really like the euro correlated currencies. Mention it frequently. If the euro goes down, they go down quicker. Okay, and I'll go and look at my favorite proxies or correlated currencies against the USD in a moment. But I want to look at next one, which is going to be US. Actually, I'm going to mention AUD USD before I go to USD CAD. We've been bearish of this one for a long time. However, I'm a bit concerned that smart money commercials are building up long positions. So we've got a bit of profit at the minute, not much, just basically over 100 pips. So I might take this one in when I do my update on Monday, unless I see follow through red to the downside, either wait for the bounce or do a swing trade long. So the Aussie is going to be the strongest of the commodity currencies in my view. That's why I'm very bullish, obviously, of AUD NZD. Well, not obviously, but that's why I'm bullish of AUD NZD. So just as a quick note there. USD CAD. I still really like the look of this. This one's been a favourite of ours for many months. We came off this level here, 120, but similar to AUD NZD actually. You have prices travelling sideways. Everyone's bearish of the USD. Price not going lower. Speculators heavily short. Commercials long. Get nice big rally there. Dip. Another nice rally. Dip. Another nice rally. Dip. Got more choppy price action in this period here. And the latest trade we've got in the market, we're underwater on this one by about 100 pips. We did reverse back down on Friday, but the volatility is not big. This is a big support level. If you were bullish of the USD, you could just buy above the 127 level. I'm looking for a move to the chart high, then 130, then 134. Now, in terms of the CAD, it has had some support from crude oil. Sorry, let me just get it. Crude oil. So it's the week chart on the daily. Crude oil really bounce up, okay, at 72. 74, I should say. We're not too far away from chart highs over here. I just don't think we can get there. In this period, basically the global economy has slowed. And then you got crude oil, mounting a big rally. Doesn't reflect the supply and demand situation. I think if we break through 72, that will really help the USD gain traction, the upside on the CAD. I think the USD is going up anyway, unless crude oil exploded to about 80 or something like that. But looking for crude to break down, okay, and support the USD. Now, where will I go next? Let's go and take a look at some euro proxies against the USD. It's on USD PLN. In terms of the USD, we're bullish against all the euro proxies. Let's just look at one today. This one's had a nice move to the upside, little bit of a retracement, buy through 395, or if it goes down, just wait to buy strength. Poland basically obviously heavily exposed to the Eurozone in terms of trade, but also it's an economy which is one of the most exposed to the supply bottleneck problems that we've had, that you've read about in the media. I personally think this is going up to 420, which is off the top of my computer screen. Let me just find the monthly chart, USD PLN. Back up to the top of the range. So like the look of that one. All the proxies look good. I won't cover them all in this video. I've covered them in previous videos. My views haven't changed. I'm going to finish off with the USD pair. which you should watch even if you don't trade it. It's USD try. Moves up there. That's a 6% move and a breakout to new multi-year highs. Why do you want to keep your eye on this one? Because you could get a lira crisis. I just want to show you the monthly chart. USD try. It's been hammered, okay? New multi-year high. I think we could trade up to 10. I think it's a high probability that we could see real problems in Turkey. It's important because Eurozone banks are heavily exposed to Turkey, okay? And, you know, a lot of those banks are not in good shape, okay? Also, yeah, if Turkey gets into real trouble, which it looks like it's going to, then that is a potential for risk off. Central Bank made a dumb move on Thursday. They decided to cut interest rates when inflation is at 19%. That is not smart. We know it's the president that's got involved in monetary policy. Not a good move. It's not going to end well. So keep your eye on USD. Try. It's enough dollar pairs. Let's look at some crosses. And I want to go to Euro JPY. Euro JPY, been bearish for all year, big move down there. Then we get the rally, sold that rally, got some profit out at 128, and then 50% came out on the big bounce up. We didn't get any profit on that. Now we're stalling. My own view on this one is limited upside, bounces a sell. I'm going to sell at 130 if we get there, stop behind the big 131 level, or if we don't get there, take a break of support, stop bank behind these candles here I'm highlighting, looking for new daily lows, 126, then 120, okay? Big trend is down. I view the bounce as a selling opportunity. If you look at Euro JPY on the monthly chart, this rally here, last 4 months we've been soft, which go to here, and then down to 120. With the amount of stimulus that the ECB are doing and bond yields the way they are, I don't see much upside for the euro on the yen. If we get some risk off, that will favour the yen. Right, next pair is going to be NZD JPY. Big move up. Then she rolls over. We sold that rollover. Then we get stopped out. But we come straight off the 78 level. You can see it, 77.80. I think we need to take out this low next week if we can. Down to chart lows, maybe on to monthly support. If we do break higher, I don't think we can get too much higher. So we'll see. Next pair is going to be CAD JPY. This one stopped me out last week. Sold the break lower, but came out at a loss as we popped above 87. Trying to rally on up towards this big 88 level. Double trend line here is going to be hard to take out. Keep your eye, obviously, on crude oil. If we move up towards this level, I might raise my entry. But at the minute, I want to come through the 87 level and the mid-Bollinger Band. So 86, 80, 84, then hopefully down to 82. Yeah, did I say keep your eye on crude oil with this one? Where are we going to go next? Let's go to GBP NZD. Again, in this pair, you get obviously a heavy fall. We come in aggressively above the 194 level. Look at this, choppy and sideways. But nice blue on Friday, just below the 95 level, 195 level. Get through 195.30. We should see a decent move to the upside. So in terms of the Kiwi, shown 4 pairs. There's other pairs you can look at. NZD CAD is breaking down. Euro NZD even looks nice for a long. The 4 I've given are my favourites though, and I really have got gut feel for AUD NZD, which has got our biggest weighting in terms of size. New week will be interesting. Can the stock market break higher? What's going to happen with Evergrande in China? Government shutdown looming in the US. Then you've got the Turkish lira melting. Will that continue? Will risk on continue? Or will we get some risk off? Personally, I'm looking for risk off. But we'll see. I don't think our positions, the way we're looking at the markets at the moment, will be too affected if we do have a grinding higher stock market, but I'm hoping we get a breakdown. Right, that's the video for today. Thanks for watching. Take care. Have a good day.